Hello, everyone. It's Sid here from Fundamental Research. And with me today is Justin Hartzman, the CEO of CoinSmart Financial. It's an up-and-coming Canadian crypto exchange with over 200,000 users. CoinSmart is one of the very few crypto trading platforms registered with Canadian securities regulators. The company is now expanding to Europe and Latin America. So the agenda for today is I'll kick off the call with our thoughts on the crypto exchange space and why we believe the sector is highly conducive for consolidation. And Justin will take over from there and talk to us about his platform, user acquisition, and growth strategies. I'm really looking forward to pick his brain and gain some more insight into the sector. For listeners, you can either wait till the end to ask questions, or if you have questions during the presentation, feel free to type them in and we'll try to respond to them. Here are some key disclaimers. Please take a moment. Okay, so let's get started. Bitcoin prices are shown here. They're down 27% year over year to $40,000 US. We conducted a statistical analysis to forecast Bitcoin prices and found that the S&P 500 accounted for 76% of the changes in Bitcoin prices in the past 2 years. Although Bitcoin is perceived as a safe haven capital preservation asset, our analysis indicated that Bitcoin is currently far from acting like a safe haven asset and has not been acting as an inflation hedge. The total market cap of cryptos worldwide is about $1.8 trillion US, and the sector is becoming a mainstream asset class quickly. For comparison, the gold sector is trading at $13 trillion. We have a positive outlook, long-term outlook on the sector, and believe that demand for cryptos will be driven by 3 key factors. Number 1, fast execution of transactions. Number 2, the ability to bypass transaction fees. And the third one is the long-term potential for some cryptos to be capital preservation assets. Now, Bitcoin has currently captured approximately 10% of investment demand for gold. We did a study on gold and Bitcoin, and we found that if it is able to capture 25% of gold's demand, Bitcoin prices can surpass $100,000. But despite our positive outlook on the sector is still in very early stages and exposed to a number of risks. Number 1, the crypto prices have been highly volatile in the past. The sector is subject to government intervention. China's ban on trading and mining cryptos can be copied by other countries. Another risk is that central banks are working on their own cryptos, which may limit the transactional use of private cryptos. And last but not least, the sector is highly prone to ransomware attacks and scams. As investing in individual cryptos can be highly risky, we've identified a niche sector within cryptos that can potentially be a low-risk alternative, and that is the crypto exchange space. Although equities of crypto exchanges have underperformed and been more volatile than Bitcoin and Ethereum, historically, we believe, and that's historical, based on historical data, we believe exchanges have potential to be a lower risk alternative to investing in individual cryptos due to 3 reasons. Number 1, they offer diversified exposure to cryptos. Number 2, exchanges thrive on volatility. This is because higher volatility means higher transactions, and higher transactions mean higher trading revenue for exchanges. And number 3, they have relatively less exposure to ransomware and hacks on individual cryptos. The number 1 reason why we like the space is that it is highly conducive for consolidation and M&A. There are hundreds of exchanges globally, making the sector highly fragmented. Fragmented sectors are generally prone for consolidation. Now, as a result of being fragmented, we believe the sector is highly inefficient. There are a number of reasons for me to say that. Number 1 is that smaller exchanges are unable to match larger exchanges in terms of fees. Larger exchanges can offer lower fees than smaller exchanges. This is because they have higher transaction volumes, and that allows them to operate at low fees. Number 2 is that due to extreme competition, exchanges are spending significantly high marketing dollars to attract users. For example, the typical user acquisition cost of a small to medium exchange is about $150. Most of the other sectors outside the cryptos they spend less than $50 on a user. For example, Netflix has a user acquisition cost of $45. Just to put things in perspective, let's say an individual signed up for 2 crypto exchanges. This means that these 2 exchanges spent a total of $300 combined for the same transaction volume. This is a highly inefficient process, and we believe significant cost synergies can be achieved through consolidation. Larger players such as Binance and Coinbase have recognized this and have started pursuing M&A. Coinbase recently announced plans to acquire Brazil's largest crypto exchange. And in addition, even small to medium-sized companies are also acquiring even smaller exchanges. A good example is WonderFi, a company backed by Kevin O'Leary, recently announced plans to acquire its second Canadian exchanges. Bottom line, these acquisitions indicate that we are going to see a sector-wide consolidation. We believe small exchanges with a loyal user base can be targets, especially if they can allow larger players to quickly expand their network in an untapped market. With that, I would like to welcome Justin Hartzman, the CEO of CoinSmart Financial. Justin, you'll be able to share your screen in a second. Please go ahead when you're ready.
Well, thanks, Sid. Appreciate having me on today here. It's a real pleasure. I get to listen to some great insights you shared there, which I agree with most all of. And I'll go through my deck here if you can see that on screen and tell you a little about CoinSmart and what we're doing, and look forward to open conversation afterwards.
Perfect. Thanks.
Yeah. Are you able to see my screen okay?
Yes, Justin.
Okay, great. So as mentioned, I'm Justin Hartzman. I'm the CEO and co-founder of CoinSmart. And we started CoinSmart in 2018 because the market was difficult to navigate. And so we thought there was a better way to do that. So we started with 3 words, and those 3 words are in everything that we decide today, every decision that we make, every product that we bring to the market, which is making cryptocurrency accessible. How do we help bring the crypto curious into the market? How do we educate them and level them up to be an ecosystem player? And then with us, we also grow at the same time, becoming the ecosystem player, adding new products to our mix to keep them within our environment and a larger lifetime value, as well as a higher revenue per user for someone because we're providing them what they're looking for. And what we are today, I always like to say is what we're not today is we're not an ETF fund. We're not a blockchain technology. We're not DeFi. We're not metaverse. We're none of those things. We are the true plumbing in the space where all that water runs through. And as you mentioned, we love volatility in the most volatile market asset class in the world because it creates volume. Volume creates revenue for us. So really excited by this. We're growing quickly, and I'm going to walk you through some of those things here today. Sorry, go the right way here. We have a 99.8% customer satisfaction rate. And that might sound like a vanity metric, but I'm saying that because it's so important to everything that we do. We're the only 24/7, 365 omni-channel live support platform out there. We will help you answer your questions at any time of the day on social media, chat, phone, whatever it may be. We're there for you to solve your problems. But even more than that, because we do such a great job and our customer experience is so great, we get 30% of our net new organic traffic from internal referrals within our system. They love what we have, they share it with their friends and family, and we grow because of that. So super important stat. Last year in 2021, and I'm gonna go through those numbers today, we started with 23,000 customers at the beginning of the year, ended with over 182,000, over $1 billion in volume. And as you mentioned, we have about a 7-to-1 unit economics right now. So every dollar we're spending to acquire a customer, we're receiving about $7 back from them. This is way above industry average in any industry, and particularly better in the crypto sphere as well, because we are catering to a market of new entrants. And I want to remind everyone, there's only 3.5% of Canadians in crypto today, and 1.5% of the entire world in crypto. So really trying to help bring those people into this market. And that's why it does have a slightly higher cost than in other industries, but we're so nascent. So this is really something that will actually decrease over time as the community is educated by the world around them. We started in 2018, raised $1.5 million at a $5 million valuation. And we launched our platform at the absolute worst time in the market. It was crypto winter, couldn't get a customer, couldn't keep a customer. And we spent all of our money that year. Went back to our investors, said, can we have some more, please? They told us absolutely not. So we asked them to lend us the money. Everyone was really excited by that because we're offering 8% per month yield on their capital. We got the paperwork out, no one signed it. So January 2019, we had no money left, went to our co-founders, myself and the two co-founders. We signed that paperwork ourselves, lent the company the money. That was January 2019. By June, we were break even, but July, we were profitable, and we have been every year since then. So we did $2.1 million in 2019 with a $600,000 adjusted EBITDA. We did 3.6 with $1 million adjusted EBITDA in 2020, and we did $16.7 million in 2021 with an adjusted EBITDA of just over $2 million. So if you look at ourselves versus other people in the sector, they're mostly net loss companies out there. We are net profitable. This is a really good position for us to be in. But we're operating in the right way. This is super important. We could have been 1,000 times bigger than we are today. You might chuckle at that a little bit. Think about Binance, FTX, and their size. They didn't care about regulation. They didn't care about products they were offering, and they expanded really quickly. We took the approach that regulatory first was the best way, and we're seeing that pay off today. So we were the first FinTrack regulated crypto asset trading platform in Canada in 2018. We're FinCEN regulated in the US for our sub down there on OTC desk. We have our Estonian license for 40 plus European countries. And I'll slow down here for a second. We're the first publicly traded, not only here in Canada, but in Germany, crypto asset trading platform that's regulated by an entire country, being Canada. We are one of 2 marketplaces in Canada and one of 5 restricted dealers. We really have a moat around our company in a significant way and something that has really high value. What we're doing now is expanding into 2 jurisdictions, and we're doing that the right way. As I mentioned, we are now in Europe and we're growing there pretty quickly right now. Latin America by 6 weeks from now, and Australia into the back half of this year. We're not only going into those areas for larger total addressable market than just in Canada, but because it allows us to offer different product sets based on the regulatory compliance. Because what we're looking to become, and we are very quickly right now, is the financial institution of the future. We want to be everything that you know in banking today based on blockchain. So you go into your TD account, your BMO account out there, you log in, you have a checking and savings account, debit and credit cards. You can take a loan out, you can buy stock, you can, do all those great things. We're building that environment. And that's really exciting for us right now, because what we offer today is crypto trading, crypto invoicing, OTC, and payment processing. Really good money makers, but where we're going into is a full service institution that offers credit facilities, that offers exchange, lending, taxation, all those things, which will help us be the one-stop shop for these new entrants to the market as we level them up, as I talked about in the beginning. Some corporate finance overview. We have 64.5 million shares fully diluted on the market today. We have a very significant insider and institutional ownership. 48% of the shares are owned by the co-founding team. 40% of the shares are owned by large institutions worldwide, around the world, very strategic partners for us in our growth. We did an aggregate financing of $17 million last year. We have over $22 million in treasury today. Myself, Jeremy, and Michael, the 3 co-founders of the company, we've known each other since we're 6 years old. We've had 4 exits together, and we're definitely different guys with different skill sets, but that's what makes us work. We are entrepreneur founders in this business. We are not hired guns, and we stand for one thing, which is to be the least smart person in the room or on the Zoom. We want to surround ourselves with some brilliant minds who do some incredible things. And I won't go through everyone on this list you see here today, but just for example, we have a guy like Joe Tosti, our Chief Compliance Officer, formerly the CCO for Quest Trade, and before that, CI. Pierre Soulard, top business lawyer in Canada, left Miller Thompson to come work with us. A lady like Jody Klein, head of growth, formerly the head of growth at CIBC, Elias Atum, director of CX, formerly the head of CX at IKEA. These people, when they're in the top of their game and they're doing amazing things, the only place to really stand out is in crypto. And they're coming to us and they're doing amazing things. And as mentioned by board, before I go to one more slide that I skipped over before, we have G. Scott Patterson, a well-known guy on Bay Street, a mentor of mine, someone who's super helpful in building out this business, M&A strategy, and all the things that we're going to talk about today. Jeffrey Huss, smartest guy I know. He's actually the international CEO for DraftKings as his real title. This guy's incredible. He's taken 3 businesses from emerging markets from gray markets to emerging markets to regulated and public, and then $10+ billion companies. Awesome guy. And then Alexa Avascott, she's the head of GC Council of Canada for Women and the GC for a company called Applyboard, a $4 billion Canadian darling tech company that no one's heard of before. But what I do want to mention quickly here is that we are completely undervalued as a company today. If you look at us against our peers, and we'll talk about right now, Netcoins as one, or BIGG, as they are on the stock symbol. And I'm going to give you numbers. Don't look at the screen here, but full year numbers. They did $14.3 million in 2021 top line. I did 16.7. They spent $4.5+ million in marketing. I spent $2.5 million. We're EBITDA positive. They're a net loss of somewhere between 5 and 10 million. They haven't announced it yet. They're trading at 14.5 times their revenue or run rate. We are trading today at less than 1. This is a truly blue sky opportunity, green pasture opportunity. I can't wait to talk to you about the other topics today, Sid. So I'll pass it back over to you. And thank you for everyone listening and learning about CoinSmart today.
Thank you so much, Justin. I appreciate the insights. We can open the call to a Q&A. Listeners, if you have questions, please feel free to type them in, or you can click on the raise hand option and I can unmute you. So Justin, while we compile all the questions, one thing I want to remind our audience is that we initiated coverage on CoinSmart back in February. We did an update based on their year-end financials earlier this month, and we'll be doing an update when the Q1 numbers are announced, most likely next month. You can access these reports if you sign up on our platform, researchfrc.com. Check out the company name, and you can access all of our reports, notes on CoinSmart and all the other cryptos we cover. So Justin, maybe let's start with it's probably the most common question you probably get. Why would someone sign up for CoinSmart when you have the bigger exchanges like Coinbase is out there? What's the differentiating aspect of CoinSmart? Maybe you can talk about 2 or 3 key things that a user really checks before they make a decision to sign up for any exchange.
Great question. Well, there's the issue now is like someone like Coinbase, Kraken, Binance, FTX. They've now really been pushed out of Canada, so not really options anymore to go to those. If we talk about the Canadian landscape, and that's really what when I say we're taking the regulatory approach, there's a double-edged sword. It's tough. We have to change how we do things on our platform, but it also helps build a moat around our company where people who are registered are here. Not to say they won't over time per se, but today that they're not. And those companies, what they don't offer, which we do, is better customer experience. So someone to handhold you, walk you through the process, which is a key aspect for new entrants into the business. And we're a much easier on and off ramp than those people, where you can get money to us easier and get money back, which is a very tough thing to do, especially if you have money coming over from the islands or from wherever it may be. It gets flagged, it takes time, or simply it's just really hard to go to the bank in Canada and send wires around to places when email money transfer and ACH become a very simple process for us to help them to do that. So we're really there on that experience side of things. And that's where we do have to stand out, because in Canada, we're very defined by the products that we can offer based on the regulator. And really right now, what that looks like is spot exchange services, which is what we do. our OTC desk, and crypto processing. We're the only company in Canada, crypto company, that offers crypto processing to people who are on e-commerce sites, legal gaming operations, things of those nature, where we have partnerships with them where they're taking crypto now as payment and an alternative to their typical credit card, because there's some huge advantages. A, larger transactions can happen. B, reduce of fraud and risk. And no chargebacks, and it's less expensive. So really some places we stand out pretty largely here.
Okay, Justin, just step back a little bit on the features you mentioned. Customer service obviously is the key thing. 24/7 you mentioned, but that's an aspect that users experience after they sign up. But before they sign up, what are 2 or 3 things that users really look for? I'm just trying to get an idea of what their behavior pattern. Are they looking at fees? Are they looking at the ability to fund their accounts, or what?
Yeah, no, it's a good question. And I think it comes from that customer experience, starting from the moment that they identify we're an option for them. So whether that's because they read an incredible article, because our PR team does a very good job, or we stand out because of the regulatory status that we have, but it really comes down to trust, transparency, and ease of use. So the fact that we are regulated, that is in the news, that we can talk about it, that we are transparent because we are a publicly traded company, they have access to our financials, and then, we have oversight of what's going on. And then before becoming a customer, the ability to actually, again, speak to our customer experience representatives, talk to them, get a good feeling for what's going on, understanding who they're dealing with. That's what really helps them to come into our platform versus going to another one out there. And then the important pieces, like you're mentioning too, do our fees, are they comparable? Do we have options in which they like to use to get their money on and off ramped? And all those, what I call table stake pieces that need to be there.
Okay, and I guess from the user perspective, they don't really get to see what the implied fee is, because exchanges charge fee based on upfront flat fee for each trade. They also make fee from the spreads. So it's very difficult for a user to kind of compare two exchanges and say, hey, which one is cheaper? Now, can you talk a little bit about your fees versus the larger players?
Yeah, so our fees, right now, actually an email just went out. Our fees are free for now until the end of next month. I think fees are a fleeting piece of the business. Where we make money is more on the spread between where the market making that we do on the platform. And I think that's more traditionally how it looks across the board for larger exchanges worldwide. And then when we can add new products to the mix of things like yield products and staking, there's a revenue share piece that really stands out in that. Okay.
A lot of exchanges, especially the larger ones, have like to give rewards to customers. And there have been a few of them have got into trouble as well for their interest related, kind of returns or rewards going back to investors or the users. Are you moving to that direction, or if not, or if can you walk us through that, please?
Yeah, we are in the jurisdictions that we're allowed to do that. In Canada, there's not a clear path to lending right now, whether it's margin pool lending, whether it's collateralized lending or anything of the sort. But that is a big piece of the business, specifically in Europe, in Asia, and Latin America. So it's something that we've built product for, we're ready to do in here in Canada. But I think we'll see us launching it in those regions beforehand, because at the end of the day, it's quite nice. If you come and you buy and you're holding $1,000 in Bitcoin, $10,000 in Ethereum, you could hold it like on our platform today, which we do, but that's a cost center for us as a business. It costs to secure, it costs to hold, it costs to transfer, to insure, all the above. When I can actually use it in a lending environment one way or the other, I can produce yields for people in the tune of 8% minimum a year, upwards of 35%, where the company's making equal amount on the other side. So, or a portion thereof, where we give 80 and 20 back. We give 80% back to our users, and we keep 20% of the yield that we produce. So that's a much better use of capital for individuals who have it sitting there, and it becomes a profit center, not a cost center for us as a company.
Okay. Now, when we were looking at your financials, one of the things that jumped off the page was yeah, a significant increase in volume from larger traders. I know you mentioned that a little bit earlier. So more than 30% of your volume comes from larger traders. Now we like the strategy because it's you can ramp up volume quickly with minimal customer acquisition costs if you're working with few large traders. Now, is that a strategy that you're going to adopt? Are you going to see more larger traders exposure in the overall revenue mix?
Yeah, it's something that we find really important, and it's for a couple reasons. One is diversification of revenue. I'll give you an example, and I can't talk for other companies in the space. The entire market seen more than a 50% drop in volume. We fared much better than the market during this downward time in the first quarter, because in fact, our product mix away from only retail customer to also being over the counter and CS premium trading, these institutions where we are their liquidity provider or people who are processing fees on a platform and taking crypto instead of credit cards, those continue to happen during these times, or they're more sophisticated traders who are going, I have buying opportunities and actually trading in and out of positions and creating revenue for themselves or, upside. This is really helpful when some of the more, less sophisticated traders and more buyers and holders may be holding back from the market right now. So we really like the fact that we don't only have retail customers and plagued by retail fatigue during a macro market like this. We can balance that with our different sets of customers and product lines.
Okay. Now, you started off as a pure Canadian platform, expanding into Europe, Latin America. Why not the US? And what's your strategy in terms of looking at Latin America when Canada, Europe alone are big markets?
Yeah, it's a good question. US is something that we always looked at and like the size of, but when you look at your European, like you say, Latin American market, it's much larger in total. The reason why we haven't is there's some really good platforms down there that we, look at a lot and go, they're doing a great job, whether it be a Coinbase or a Kraken, which are the two that really stand out to me down there, really corner the market, have lots of customers, built really good products and teams down there. And the regulatory path is really uncertain. So for us to go in there, when you have a state by state, different in regulation and way it's doing, whether you're a money service provider here or your payment processor there, it's a really clouded space to get into. So until we see some more clarity down there, I don't think it's on our radar, and we're focused on these other underserved or underbanked markets like Latin America, which are really picking this up at a faster speed than the rest of the world.
Okay. Let's talk a little bit about user acquisition, their costs and the strategies. Hundreds of companies or exchanges fighting for or competing for users. A lot of marketing dollars being thrown around. How can you differentiate in this environment? Be it when it comes to marketing. Are you doing something different what others are not doing?
I think a little bit. What we're trying to stay away from is the mass marketing events out there, whether it's the giant sponsorships, and we've done some here in Canada. We are the official sponsor of the CHL and all the leagues underneath of them in Canada, which it's a great partnership that we love right now. And we stick to things that are more direct marketing, where we can see the direct line from what it costs us to do to what we're getting back from our user over the lifetime value. So affiliate marketing is a really big piece for us. Influential marketing is a really big piece for us. We get very targeted, sophisticated ad campaigns that we do. We work with large partners in sponsored content. And then, as I mentioned, a big piece of what we do is encouraging our users who've had great experience to share that with their friends and family. And then we pay them to actually do that at the same time. If they refer someone, they get paid for that. And we're actually just rolling out a very interesting, cutting edge new referral program internal, because we know it's so great as it is. Let's incentivize those people more for the hard work they do, of the evangelistic work they do on our behalf.
Okay. So how different are these user acquisition costs when it comes to Europe and Latin America versus Canada?
Latin America, I can't talk to you guys. We've yet to launch into that region. We've done some preliminary numbers, and we plan on going in there for the larger customers first. So really working on our OTC and P2P transactions down there, which is a much lower cost of acquisition and a much higher margin product for us. So we'll see how that plays out in the long run. In Europe, cost to acquire is considerably higher right now and lifetime lower. And that's because what Europeans are looking for and what we've learned over our times entering that market is they want a full service platform, not just a place to go buy, sell crypto, but somewhere where they can lend and stake and have a credit card from. So as those products are about to roll out over the next little while here at CoinSmart, we'll be making a bigger push. And we believe that our unit economics will get better over time because we see a customer coming now, they buy from us, and then they take it to another platform to do something else. If we can avoid that churn of the dollars, they'll come back to buy from us again, but then they take that again and move it to another platform. So if we can keep them within our house, we know that the unit economics will work out for us, and we're building that business as quickly as we possibly can.
Okay. What can you tell us more about? I don't know how much you can talk about this question. WonderFi's acquisition of two exchanges. They were both also registered, like CoinSmart. What's your strategy going forward? Is it you want to pursue acquisitions and grow through acquisitions, or are you trying to position yourself as a target?
Well, it's a great question. And it's not one that I can give you a distinct answer for, but it's something like that. Here, let's move back for a second. Consolidation is happening in the space. You're seeing it right now. There's lots of conversations that are happening within foreign exchanges within Canada, two foreign exchanges within Canada. And I think you're going to see more of it over the next, as soon as 90 days upwards of, the next years to come. And it's going to be, it's needed because we need to make sure that we're creating the best product with the most safety and transparent for those people in the market. The question of, are we going to be someone who's being acquired or an acquirer? We've started down the path of being an acquirer. You'll see we put out a notice that we've just did a initial purchase of a minority part of another company in the NFT space. You'll have some more information coming down the road. We're looking at other regional small players throughout Europe that we can bolt onto our platform, bring their customers into a better environment that's regulated. But quite frankly, where the market is today, and not only in the crypto space, but all capital markets, being that it's a depressed time, it's hard to do M&A transactions because people have seen their stock price, some people 20% down, some people 50% down. And when you're not showing your own multiples that are doing well, it's hard to then go out and buy someone for a proper multiple they want to be bought for. And then on the back of that, raise the capital that you need to do at a valuation that makes sense for your company. So all those factors in play, I still think you're going to see a lot of M&A going on in the space. And we're definitely looking at it from all directions.
Okay. Now, in terms of acquisitions, conventional lenders have stayed away from lending capital to crypto so far, at least most of them. Have you been talking to lenders, conventional banks, lenders, just to get some insights on what they're thinking these days? Have you started seeing them more open to your proposals? How is the lending market for cryptos these days?
I honestly couldn't give you a great answer to that because we haven't been out in the market looking for debt facilities in any way. We're a debt-free company, and we try and maintain a healthy balance sheet and raise funds on an as-need basis to do so. That being said, anecdotally, I am being contacted by more traditional lenders than I ever have before for growth capital, for acquisition of capital. But the big banks are obviously slower to adopt that. I don't think they want to lend to that scenario when they're not even willing to provide bank accounts for, publicly traded and registered companies like our own. So it's still a wait and see game for me out there, how those traditional lenders and banks will lend to the space, will bank the space, whether it's, regular banking or investment banking on that side. So it's we're still learning about that right now.
Okay. So one more long-term vision strategy question. Are we trying to understand, are you looking to be a platform with mass following or a smaller exchange providing multiple services to users, creating a more loyal niche network? Or is this the first one where it's mass platform?
Yeah, we're looking to scale. We have over 250,000 customers at this time worldwide. We want to, achieve 1 million customers in a short order and continue to build a profitable up into the right company in the years to come. We're still in, we're in the second inning. Some people still saying, I agree with them. We're still in the first half of the first inning of crypto. Or if you look at the S curve of adoption, we haven't even got to the part of the S where we see parabolic growth. I mentioned earlier, lots of cliches here, but there's only 1.5% of the entire world in crypto today. This is a nascent emerging market. There's big companies in it already, but these companies can become massive, if they follow regulation and move forward, or it leaves room for companies like ours who may have grown slower out of the gate to grow even quicker and become one of those. So this is early days still. People, have heard about it since, more over the last 4 years, a lot, but even past that, 12 years. But we're right at the very beginning here.
Okay. Final question, Justin. Trading volumes are down across the board. Crypto trading volumes are down versus last year. Most exchanges are coming out, even yourself, coming out with Q1 numbers, which are likely to be weaker than last year because of lower transaction volume means lower revenue for exchanges. What would you tell investors in this market, for the upcoming Q1? What should they be looking at? And what are the key things key highlights for upcoming Q1?
Yeah, key highlights. I think that this is a great question. There's a couple things to unpack here. First of all, if you're looking at this at a company, take sentiment out of it. You can actually do some proper fundamental analysis on these things. There's real businesses behind them, which is great. That's one. Two, look how they're faring this year versus last year versus the entire market. I think that's key. And specifically Q1 of 2022 versus Q1 of 2021. Have they shown growth since that time, or are they down year over year in that scenario? And without giving too much away, I can't say much now. My Q1 2022 was greater than my Q1 2021. Which was a huge growth time for us at that period. So really analyze it and dig into it. But what I think that people need to really take a look at is the balance sheet and how they're operating their company. Do they have a treasury that can support them over time? How much burning capital are they burning currently? What is their run rate? Are they very cash conservative during these times and making sure they're conserving those things? So if you look at the combination of all of that, and then the other thing I would do is just as an investor myself out there, diving towards us is, reach out to those companies, ask those questions, do those co-founders, CEOs, investor relations have the answers that you're looking for? Are they open to having those conversations? And those are probably the winners that you'd be looking at. This is the time when you take your dry powder in a depressed market and buy these stocks that are down for some serious upside in the future.
Fantastic. I don't see any more questions, Justin. Any final thoughts?
No, this has been great. I really appreciate your time. Glad that everyone was here, could answer some of your questions. And you can see my information on the screen. As I just gave you some advice, please feel free to reach out to me at any time. Happy to answer your questions, give some direction, or just answer anything about crypto that you want to know. So thank you, Sid, for your time. And thank you everyone else for listening to me today.
Thank you so much, Justin, and everyone on the call for taking time today. The recording will be uploaded on our YouTube channel shortly. Please ensure you subscribe to our channel and also sign up to a member for platform researchfrc.com. You'll get alerts when we publish new reports. And of course, you'll be able to see our list of top picks. Thanks again and wish you all the best and stay safe.